Yesterday we saw a big reversal in fubo stock. Why did this happen, and will it last through the summer and the end of the year? We'll go over answers to those and more questions in today's video, so let's get to it. Full disclosure, I do have options in fubo that expire this December. I'm net long through vertical spreads. So the most important metric for a growth company like fubo is that Wall Street looks after its sales revenue and stock price relative to revenue, aka price to sales ratio, PS ratio, and the lower the number, the better. The company has posted some incredible numbers, growing 135% in revenue year over year per their last earnings report, which is great even for growth companies. Their PS ratio at the end of May was about 5. Compare that number to one of their competitors, DraftKings, with a 21 PS ratio, or some of the following names, which are high flyers from the past 12 months. CrowdStrike, one of my favorite holdings, has a PS ratio of 55. Even the big names that have corrected 30 to 50% this year, like Tesla at 20 PS ratio, Zoom at 35, and most of these companies aren't even growing at the rate which fubo is. Remember that 135% number? Tesla's was a 73% year over year increase, and Zoom's forward guidance is at 50%. I could go on and on with so many examples, and I wouldn't even get to the EV names, but look, the bottom line is this: fubo stock has been unfairly targeted by short sellers and is massively undervalued in my opinion. A company this good deserves a far higher valuation than the current $4 billion price tag it has, especially in this environment where its growth stock peers have seen 4-5x increases in valuation. The reason behind why I say unfair short selling is that the company has been targeted by BS lawsuits from some investors that mostly complain about forward guidance nature of fubo's prior statements. I'm not sure how they're going to prove any wrongdoing considering forward guiding statements aren't really regulated, but I don't want to dwell on the legal details of this as I think it's total nonsense and the company just proved them wrong already as they posted crazy numbers for Q1 a few days ago, giving the lawsuits even less credibility now. Lastly, let's take a look at the chart. The stock has been beaten down to oblivion in such a short time frame. As we can see here, it saw a 75% decline from peak to trough in 5 short months starting in December of 2020. It broke many support levels in the process, but it found strong support right at this line here at 15, as we can see, to make a full reversal to almost doubling up in 3 short weeks from the lows. But guess what? The run doesn't stop here. In no way am I closing my long positions now. I will ignore this next level of resistance considering the utter momentum it's on right now and wait for that next resistance line at around $40 to make a decision. I'm very bullish on this name. It's been one of my highest conviction growth plays this year, a year where I've largely shorted growth names because I felt that they were way overvalued in 2020. At this rate, I think this stock can be $100+ stock next year, given no big surprises come about. I'll be making more videos in growth names in the coming weeks. Alright guys, if you liked the video, hit the subscribe button, drop a like and a comment below if you have any questions. Peace out.